how do you establish, risk when you look at your portfolio and when you are trading? Do you have a trading portfolio and a long-term portfolio? Do you separate the two? Do you look at things a little differently? How do you manage your risk on a personal portfolio?
I don't have a dichotomy of like long-term holds and short terms. To me, they're all intended to be long-term holds. Naturally, with short trades, you can't expect them to be held for years, or usually even months, because they're not going to go into negative numbers. I mean, they will settle down at some point. The way I manage the risk is on a chart-by-chart basis. Every chart is different. I know to the penny when my thesis about a particular stock is invalidated, and I set the stop there. It usually tends to be well less than 10% loss, usually more like 2, 3, 4% loss. And the amount of the portfolio overall that a single trade represents is absolutely minuscule, like 0.15%. I mean, so if I wake up one morning and Whole Foods has doubled in price, that's not great, but it's not going to have any deleterious effect on me.
Right. So you will, will you actually hold, 100, 200 stocks at a time? I think that's
at the moment, at this very second, I've got 233 positions on, and if this darn market would start to crack a bit, I could easily see it going to 300. Some people, all people, are kind of flabbergasted at that because they consider about 10 stocks to be enough. I am really organized and systematic about my trades, and it makes sense to me, and it's feasible for me to manage that much.
How do you organize something that large? Because, again, I've run a portfolio, and 20 to 50 is a lot for me. 50.
Yeah. Well, I spend a lot of time on it. I mean, I've got this spreadsheet that I'm very proud of that I kind of manage the risk on and manage my stops. I mean, the most time-consuming aspect of it is just going through, and I don't do it every day, there's no way I could, but going through from time to time, chart by chart by chart, and updating all those stocks. I just let them sit, and if the market does pull back a reasonable amount, a couple of percent, then I figure it's time to go in there and adjust, because I don't want to just let the stops get stale because you put all your profit at risk.
So do you look at your risk reward same, or are you looking for a bigger gain on your reward than your risk typically? Again,
it does. I was actually thinking about that just yesterday in terms of tracking target prices and focusing on the risk reward ratio. I consider target prices less useful and not nearly as feasible to establish as the stock prices. I'd rather the stock go where it may, as opposed to supposing how low it might go. So no, I don't really do risk reward ratios.
But if a stock goes your way 10%, Tim, and you were risking 5, will you start pulling some off, or you add to it? Do you pyramid the position? How will you?
Yeah, it's a very good question. Usually, either one of two things. Usually, I'll either take half off and tighten the stop, or more commonly, I'll just tighten the stop. As you know, as a trader, usually the expense comes from the money left on the table, and I've been guilty of that plenty of times. And I'd rather just keep the position on. And being a short, usually they shrink in size as opposed to growing. If it's an ultra fund, I would have a very different disposition because the sheer percentage weight would magnify. Going back to the SKF position, let's say it went up 20% in price. That's great. But I don't want that much money at risk. I'd rather take a chunk of that out.
So you readjust the portfolio, as you said. Obviously, shorts coming into money actually reduces the risk of that specific portfolio. Just so folks understand. And when the long side, like a SKF reverse ETF, ultra ETF goes up, your portfolio is actually, that position is actually growing in size because of the nominal value. So you're always adjusting that, but you try to be pretty consistent then with the size of each position. And do you have a max size that you'll go to? Do you have a max drawdown?
I've got all kinds of nice books about portfolio formulas and management and so on, and it's a little more arbitrary than that. I tend to be very consistent in terms of dollar size. I mean, my stock trades tend to be $10,000 or $20,000. ETFs tend to be 100 to 250 to maybe 500,000.
Right.
You know, in some instances, $1 million. Like SKF right now, I've got $1 million of that, that's about. But there's no real science to it. I just try to be consistent about it based on the nature of what I'm doing. So if I am shorting something like Whole Foods or some other just single position, I'm not going to short $500,000 of Whole Foods.
Right.
I mean, it's not.
And are you? How many times will you go in and out of a short? I mean, you short Whole Foods at 20, you're out at 22. You short it at 25, you're out at 27. Yeah. Will you play that game? Or do you back spread? Or, I mean, will you sell stock by calls to prevent yourself from getting shaken out of a position? Do you do any of things like that?
No. It's I've got a pretty long memory when it comes to stocks, and I find stocks are a lot like people. They have personalities, and you get along well with some, and you don't get along so well with others. You know, like take precious metals, for example. I've basically learned to fear them because there have been times that I've made money in the short time with GDX and GLD, but I don't understand why they keep going up, and I'd rather not mess with them. Another great one is...
I'm curious, did you feel the same way about oil in 08?
I actually wasn't really messing around with oil at all, or Dig and Dug and all those other things. There's a funny story behind that because in retrospect, the very top of that market, I went to here in the Bay Area. It's called the Maker Fair, which is for people who like to do it. I mean, it's a cross between the hippie culture and the nerd culture, and it's very popular. And you get people who do everything from like making robots to like running a loom and making fabric. And at this thing, they were selling the peak oil poster, and I bought one there because I thought it was pretty interesting. And in retrospect, if the notion of peak oil was at this weird hippie Maker Faire thing, you know, that's pretty far gone, and that was actually the top of the market. But going back to what I was saying, there's one on the blog we sort of jokingly called the Widowmaker, the ultra short on real estate, SRS, right, which I'm sure you're acquainted with.
Yep.
I've had so much bad luck with SRS. No matter how alluring I think the chart is, it's just like, no. I'm done with you.